Picture this. You sit down at your computer, charts glowing on the screen, and you feel that familiar rush. Today might be the day. Today you might finally crack the code. You've studied the patterns, memorized the indicators, and crafted what you believe is the perfect strategy. Yet somehow, despite all your preparation, despite all your knowledge, the results never seem to match your expectations. Sound familiar? Here's the uncomfortable truth that most traders spend years avoiding. Your strategy isn't the problem. Your indicators aren't failing you. The market isn't rigged against you. The real issue runs much deeper than any technical analysis could ever reveal. It lives in the space between knowing what to do and actually doing it. It exists in that split second when fear whispers in your ear, or when greed convinces you to break your own rules. Most traders believe that success comes from finding the holy grail strategy. They hunt for the perfect entry signal, the flawless exit technique, the indicator that never lies. But while they're searching for external solutions, they're missing the most critical element of all, the element that determines whether any strategy will work, the element that separates the few who succeed from the many who fail. That element is discipline. This isn't just another trading lesson. This is about understanding why brilliant traders with mediocre strategies consistently outperform brilliant strategists with poor discipline. It's about recognizing that in the ruthless arena of financial markets, your greatest enemy isn't market volatility or unexpected news events. Your greatest enemy is the voice inside your head that convinces you to abandon your plan when it matters most. The market has a way of exposing who you really are. It strips away pretense and reveals your true character. When you're faced with a losing position, when your account balance is dropping, when everyone around you seems to be making money while you're struggling, that's when your real self emerges, and that's exactly when discipline becomes your lifeline. You see, the market doesn't care about your hopes. It doesn't respond to your fears. It doesn't adjust itself to accommodate your timeline or your financial needs. The market simply reflects back to you the quality of your decisions, the consistency of your actions, and the strength of your resolve. It's a mirror that never lies, never flatters, and never gives you what you want simply because you want it. Think about the traders you admire, the ones who've built lasting wealth from the markets. Paul Tudor Jones didn't become legendary because he had access to secret indicators. Richard Dennis didn't turn a small account into millions because he discovered some hidden market pattern. These traders succeeded because they understood something fundamental that most people miss entirely. They understood that trading is not about predicting the future. It's about responding to the present with unwavering consistency. It's about executing the same disciplined approach, whether you're winning or losing, whether the market is trending or sideways, whether you feel confident or uncertain. This consistency, this discipline, this ability to act according to plan rather than according to emotion, that's what transforms ordinary traders into extraordinary ones. But here's where most people get it wrong. They think discipline means being rigid, mechanical, emotionless. They imagine successful traders as robots who never feel fear or excitement. This couldn't be further from the truth. Discipline doesn't mean you don't feel emotions. It means you don't let those emotions make your decisions for you. The disciplined trader feels the same fear when a position moves against them. They experience the same excitement when a trade starts moving in their favor. The difference is they've trained themselves to acknowledge these feelings without being controlled by them. They've learned to create space between stimulus and response, between what happens in the market and how they choose to react. This space, this pause, this moment of conscious choice is where fortunes are made and lost. It's where discipline either saves you from catastrophic mistakes or abandons you to the mercy of your impulses. Most traders never develop this space. They react instantly, emotionally, predictably. And the market, which rewards patience and punishes impulsiveness, takes their money with ruthless efficiency. Consider this scenario. You've identified what appears to be a perfect setup. Every indicator aligns. The pattern looks textbook. Your strategy says this is exactly the kind of trade you should take. But then doubt creeps in. What if you're wrong? What if this is the one time the pattern fails? What if you lose money you can't afford to lose? The undisciplined trader hesitates. They second-guess themselves. They either skip the trade entirely, missing a profitable opportunity, or they enter with such anxiety that they exit at the first sign of normal market fluctuation. The disciplined trader, on the other hand, recognizes these doubts as normal human responses. They acknowledge the uncertainty while still executing their plan. This is the paradox that confuses most people. The disciplined trader isn't more confident about any individual trade. They're more confident in their process. They understand that no single trade defines their success or failure. They know that discipline isn't about being right every time. It's about being consistent every time. When you truly grasp this distinction, everything changes. You stop looking for the perfect strategy because you realize that perfection lies not in your method, but in your execution. You stop jumping from system to system because you understand that your results have less to do with what you're trading and more to do with how you're trading it. The statistics tell a sobering story. Approximately 70 to 80% of retail traders lose money. Not because they lack intelligence, not because they can't learn strategies, not because the market is impossibly difficult to understand. They lose because they can't maintain discipline when it matters most. They abandon their plans during drawdowns. They overtrade when they're winning. They let emotions drive decisions that should be driven by logic. But here's what those statistics don't capture. They don't show you the small percentage of traders who do succeed. They don't reveal what separates the winners from the losers, and they certainly don't explain why some traders with simple strategies consistently outperform others with sophisticated systems. The answer lies in understanding that trading is fundamentally a game of probabilities played out over time. No strategy wins every trade. No system eliminates losses. No method guarantees profits. But discipline, applied consistently over hundreds of trades, allows the mathematical edge of a sound strategy to express itself. Think of it this way. If you flip a coin, you can't predict the outcome of any single flip. But if you flip it 1,000 times, you can predict with high confidence that roughly half will be heads and half will be tails. Trading works the same way. Your edge isn't in knowing what will happen next. Your edge is in maintaining discipline over enough trades for your statistical advantage to manifest. This is why the best traders focus more on their process than their profits. They measure success not by how much money they made today, but by how consistently they followed their rules. They celebrate not the big winners, but the disciplined execution of their plan. They understand that profits are a byproduct of good process, not a goal to chase directly. The undisciplined trader operates in reverse. They focus entirely on profits, ignoring process. They celebrate big wins while learning nothing from them. They panic over losses instead of analyzing what went wrong. This approach guarantees inconsistency, which is the enemy of long-term success. Here's what most traders never realize. The market is designed to test your discipline. It will tempt you with seemingly easy money right after you've suffered a loss. It will present you with perfect setups right when you're feeling overconfident. It will create conditions that trigger your deepest fears and strongest impulses. This isn't coincidence. This is the nature of markets. Markets are moved by human psychology. Fear and greed create the very opportunities that disciplined traders exploit. When fear dominates, prices fall below fair value, creating buying opportunities. When greed takes over, prices rise above reasonable levels, creating selling opportunities. The disciplined trader remains calm in both scenarios, executing their plan while others are driven by emotion. But discipline isn't just about emotional control. It's also about intellectual honesty. The disciplined trader admits when they're wrong quickly. They don't hold losing positions hoping for a miracle. They don't average down on trades that aren't working. They don't let ego prevent them from taking small losses before they become large ones. This intellectual honesty extends to strategy evaluation as well. The disciplined trader doesn't fall in love with any particular approach. If their method stops working, they adapt. If market conditions change, they evolve. They understand that flexibility within a disciplined framework is not contradiction, but necessity. The beautiful irony is that discipline actually creates more freedom, not less. When you know you'll follow your rules regardless of how you feel, you're free from the anxiety of second-guessing every decision. When you trust your process, you're liberated from the need to predict every market move. When you accept that losses are part of the game, you're released from the fear that paralyzes so many traders. This freedom allows you to see opportunities that others miss. While undisciplined traders are caught up in emotional reactions to the last trade, disciplined traders are calmly preparing for the next one. While others are fighting the market, trying to impose their will on price movements, disciplined traders are flowing with probabilities, taking what the market gives them. The path to developing this level of discipline isn't easy, but it's simpler than most people think. It starts with brutal self-assessment. You must honestly evaluate your current approach. Where do you break your own rules? When do emotions override logic? What patterns of self-sabotage keep repeating? Once you identify these patterns, you can begin to address them systematically. Not all at once, which leads to overwhelm, but one at a time with focused intention. Maybe you start by never moving a stop-loss against you. Maybe you commit to taking every trade that meets your criteria, regardless of how you feel. Maybe you practice cutting losses quickly without looking back. Each small victory in self-discipline compounds into something much larger. When you successfully resist the urge to overtrade after a big win, you're not just saving capital, you're rewiring your brain. When you take a planned loss without hesitation, you're not just managing risk, you're building the neural pathways that separate professionals from amateurs. This is where most traders misunderstand the journey. They think discipline is a switch you flip once and then you're done. In reality, discipline is a muscle that must be exercised daily. Some days it will feel strong, other days it will feel weak. The key is to keep working it regardless of how you feel in the moment. Professional traders understand this deeply. They don't wake up every morning feeling motivated. They don't always want to follow their rules. They don't always feel confident about their next trade. But they've learned something that transforms everything. They've learned to act independent of their feelings. This separation between action and emotion is perhaps the most profound shift any trader can make. Most people live their entire lives believing they must feel ready before they act. They must feel confident before they take risks. They must feel motivated before they work. The disciplined trader operates from the opposite framework. They act first and feelings follow. When you understand this principle, you realize why so many talented people fail in trading. They wait for the perfect emotional state that never comes. They postpone taking trades because they don't feel certain. They abandon strategies during rough patches because they don't feel optimistic. They're letting their internal weather determine their external actions. The market doesn't care about your internal weather. It moves according to its own logic, its own rhythm, its own timeline. Your job isn't to feel good about every trade. Your job is to execute your edge regardless of how you feel about it. This might sound cold or mechanical, but it's actually the most liberating realization you can have as a trader. Think about what this means practically. You no longer need to psych yourself up before taking trade. You no longer need to feel bullish to buy or bearish to sell. You no longer need market conditions to align with your mood. You simply need your setup to align with your criteria. Everything else becomes irrelevant noise. This is why the best traders often appear almost bored while trading. They're not experiencing dramatic emotional swings with each price movement. They're not celebrating every winner or devastated by every loser. They're simply executing their process with the same steady consistency, whether the market is volatile or calm, whether they're winning or losing, whether they feel sharp or tired. But achieving this level of emotional equilibrium doesn't happen overnight. It's developed through countless hours of conscious practice. Every time you feel the urge to overtrade and resist it, you're building discipline. Every time you want to move a stop-loss but don't, you're strengthening your resolve. Every time you take a loss according to plan instead of hoping it will turn around, you're becoming more professional. The undisciplined trader experiences these same moments but makes different choices. They give in to impulses. They rationalize rule breaking. They prioritize short-term comfort over long-term success. Each time they do this, they're programming themselves for failure. They're teaching their brain that rules are optional, that plans can be abandoned when convenient, that discipline is something they'll develop later. Later never comes. Later is where discipline goes to die. The only time that matters is now. The only trade that matters is the next one. The only choice that defines you is the one you're about to make. Here's something most traders never consider. The market is constantly teaching you about yourself. Every trade is a test of your character. Every drawdown reveals your true relationship with risk. Every winning streak exposes your relationship with success. The market doesn't just give you financial feedback. It gives you psychological feedback about who you are and who you're becoming. The disciplined trader uses this feedback constructively. They see patterns in their behavior and adjust accordingly. They notice when they start getting careless during winning streaks and implement safeguards. They recognize when losses start affecting their judgment and take steps to maintain objectivity. They treat their trading journal not just as a record of trades, but as a mirror reflecting their psychological evolution. Most traders avoid this level of self-examination. They focus entirely on external factors. They blame the market, their broker, the news, other traders, economic conditions, anything except their own decision-making process. This external focus keeps them stuck in cycles of inconsistency because they're not addressing the real source of their problems. The truth is uncomfortable but necessary. Your results in trading are a direct reflection of your level of discipline. If you're inconsistent, your results will be inconsistent. If you're emotional, your results will be emotional. If you're undisciplined, your results will reflect that undiscipline. The market is simply amplifying and reflecting back to you the quality of your internal state. This isn't meant to be harsh or judgmental. It's meant to be empowering. Because if your results are a reflection of your discipline, that means you have complete control over improving them. You don't need to wait for market conditions to change. You don't need to find a better strategy. You don't need external circumstances to align in your favor. You simply need to become more disciplined. But what does discipline actually look like in practice? It's not about following a rigid set of rules without thinking. It's about having principles that guide your actions even when those actions feel uncomfortable. It's about making decisions based on logic and while still taking action. Probability rather than hope and fear. It's about accepting uncertainty. Disciplined traders have learned to be comfortable with discomfort. They understand that profitable trading often requires doing things that feel wrong in the moment. Buying when everyone else is selling feels wrong, but it's often profitable. Cutting losses quickly feels wrong because you're accepting defeat, but it's essential for survival. Taking profits on winning trades feels wrong because you might be leaving money on the table, but it's necessary for consistency. This comfort with discomfort extends beyond individual trades to overall market conditions. Disciplined traders don't need perfect conditions to be profitable. They can adapt their approach to trending markets, ranging markets, volatile markets, or quiet markets. They don't complain about conditions or wait for ideal setups. They work with what the market gives them. The undisciplined trader, by contrast, is always fighting the market. They want trends when the market is ranging. They want calm when the market is volatile. They want certainty when uncertainty is the only constant. This resistance to what is creates internal friction that shows up in their trading results. Acceptance doesn't mean passive resignation. It means acknowledging reality so you can work with it effectively, rather than against it futilely. The disciplined trader accepts that losses are inevitable while still working to minimize them. They accept that perfect timing is impossible, while still working to improve their entries and exits. They accept that markets are unpredictable while still developing edge through disciplined execution. This acceptance creates a psychological freedom that's difficult to describe, but impossible to ignore once you experience it. When you stop fighting what is and start working with what is, trading becomes less stressful and more productive. You stop wasting mental energy on things you can't control and focus that energy on things you can control. What can you control? Your preparation, your risk management, your entry and exit criteria, your position sizing, your emotional responses, your learning process, your adaptation to changing conditions. These elements, executed with discipline over time, determine your long-term success far more than any external factor. The beautiful paradox is that the more you focus on what you can control, the more influence you seem to have over what you can't control. Not because you're actually controlling market movements, but because you're positioning yourself to benefit from whatever movements occur. You're not predicting the future, you're preparing for multiple possible futures. This preparation goes beyond technical analysis or strategy development. It includes psychological preparation. Before each trading session, disciplined traders prepare mentally. They remind themselves of their rules. They visualize executing those rules under pressure. They anticipate potential challenges and plan their responses. They enter the market with clear intentions rather than vague hopes. During trading, they maintain this psychological discipline through constant self-monitoring. They check their emotional state regularly. They notice when they start deviating from their plan and correct course immediately. They treat each trade as independent of the last one, bringing fresh perspective to every decision. After trading, they review not just their trades, but their adherence to their process. They celebrate disciplined execution even when trades lose money. They identify areas where discipline broke down and implement improvements. They treat each trading day as a learning opportunity rather than just a profit opportunity. This systematic approach to discipline development is what separates serious traders from casual ones. Casual traders hope discipline will develop naturally over time. Serious traders work on discipline deliberately and systematically. They understand that discipline is a skill that can be improved through focused practice, just like any other skill. The rewards of this approach compound over time in ways that are difficult to appreciate initially. In your first year of disciplined trading, the benefits might seem modest. You're making fewer mistakes, but you're not necessarily making dramatically more money. In your second year, the improvements become more noticeable. Your consistency improves, your confidence grows, your stress decreases. By your third year of disciplined practice, something remarkable happens. Trading stops being a constant battle with yourself. Your disciplined responses become automatic. You naturally avoid the mistakes that derail most traders. You naturally capitalize on opportunities that others miss through hesitation or fear. You've developed what professionals call unconscious competence. But here's what most people don't realize about this journey. The external results, the profits, the account growth, these are actually the least important benefits. The most valuable thing you develop through disciplined trading is a completely different relationship with uncertainty, with risk, with your own emotions, with pressure, with success and failure. These skills transfer to every other area of life. The patience you develop waiting for proper trade setup serves you in career decisions. The emotional control you develop managing losses serves you in relationships. The adaptability you develop adjusting to market changes serves you in any challenge you face. The discipline itself becomes a core part of your identity. This is why trading, approached correctly, is one of the most powerful personal development tools available. It forces you to confront your weaknesses, develop your strengths, and build character under pressure. Most traders focus only on the money, missing the profound personal transformation that's available through this process. The money is important, of course. Financial freedom provides options and opportunities that poverty cannot. But the person you become in the process of developing trading discipline is worth more than any amount of money you might earn. That person can create wealth in any market condition, in any economic environment, through any personal challenge. When you understand this deeper purpose, trading stops being just about money and becomes about mastery. Not just mastery of markets, but mastery of yourself. And once you achieve that level of self-mastery, success in trading becomes not just possible, but inevitable. The question isn't whether you can learn to trade profitably. The question is whether you're willing to develop the discipline necessary to execute what you already know consistently over time. Most traders have enough knowledge to be successful. Very few have enough discipline to apply that knowledge when it matters most. This is the real edge in trading. Not better information, not faster execution, not more sophisticated tools. The edge is psychological. It's the ability to do what needs to be done regardless of how you feel about doing it. It's the capacity to maintain long-term perspective when short-term pressures mount. It's the strength to stay the course when everyone around you is panicking or celebrating. This edge reveals itself most clearly when pressure mounts. When your account is down 20% and doubt creeps into every decision. When you see others posting screenshots of massive gains while you're grinding through small, consistent profits. When the market moves against you for days, testing every ounce of resolve you thought you had built. These moments don't destroy disciplined traders, they reveal them. While others panic, make desperate moves, or abandon their plans entirely, the disciplined trader recognizes these periods as exactly what they are. Tests, not of their strategy, not of their intelligence, but of their character. And character, once forged in the fires of market pressure, becomes unbreakable. You see, the market has a strange way of presenting its greatest gifts wrapped in the most uncomfortable packages. The best opportunities often appear when sentiment is darkest, when fear dominates headlines, when everyone else is running for the exits. The disciplined trader doesn't need to feel optimistic to act. They don't need confirmation from others to execute their plan. They simply need their criteria to be met. This separation from crowd psychology is perhaps the most valuable skill any trader can develop. Not because crowds are always wrong, but because crowds are always emotional. An emotion, while powerful as motivation, is catastrophic as a decision-making tool. The disciplined trader learns to observe crowd emotions without being swept up in them. Think about the last time you made a trading decision based on what others were doing. Maybe you saw everyone buying a particular stock and felt compelled to join. Maybe you noticed others taking profits and decided you should too. Maybe you read about someone making huge gains with a certain strategy and immediately wanted to switch approaches. How did those decisions work out for you? Most traders can recall multiple instances where following the crowd led to poor outcomes, yet they continue to make the same mistake because they haven't developed the psychological independence that discipline provides. They're still looking outside themselves for validation, for permission, for confirmation that their choices are correct. The disciplined trader operates from internal validation, not arrogance or stubbornness, but confidence in a process that has been tested, refined, and proven over time. They don't need others to agree with their decisions because their decisions aren't based on opinion. They're based on objective criteria applied consistently regardless of external noise. This internal compass becomes especially crucial during extended losing streaks. And make no mistake, losing streaks are inevitable. No strategy wins all the time. No trader avoids periods of poor performance. The difference lies not in whether these periods occur, but in how you respond when they do. The undisciplined trader interprets losing streaks as evidence that their approach is flawed. They start questioning everything. Should I change my strategy? Should I increase my position sizes to make back losses faster? Should I take a break until conditions improve? Should I find a mentor or buy a new course? This questioning spiral often leads to the exact opposite of what they need. Instead of staying the course, they abandon ship just when persistence would serve them best. The disciplined trader views losing streaks differently, not as failures, but as statistical realities. They understand that if their strategy has a 60% win rate, 40% of their trades will lose. Sometimes those losing trades cluster together. Sometimes variance works against you for weeks or even months. This doesn't mean the strategy is broken. It means probability is playing out exactly as expected. This perspective shift changes everything. Instead of fighting losing streaks, you prepare for them. Instead of panicking when they arrive, you endure them. Instead of abandoning your approach during difficult periods, you trust the mathematics that you've already validated through proper testing and execution. But preparation goes beyond intellectual understanding. It requires emotional conditioning. You must experience enough losing trades, enough drawdowns, enough periods of doubt to build genuine confidence in your process. Not blind faith, but evidence-based conviction that your approach works over time even when it doesn't work right now. So here we are at the end of this journey together. You came here looking for another strategy, another edge, another secret that might finally unlock consistent profits. But what you've discovered is something far more valuable. You've learned that the secret was never hidden in the charts or the indicators or the latest trading system. It was always within you, waiting to be cultivated through discipline. The transformation you need isn't technical, it's psychological. It's not about finding better setups. It's about becoming someone who executes good setups consistently. It's not about predicting the market. It's about preparing yourself to respond to whatever the market presents with unwavering discipline. This isn't just about trading. It's about who you become in the process. The patience you develop waiting for proper setups changes how you approach every decision in life. The emotional control you build managing losses serves you in relationships, in career challenges, in moments of pressure that have nothing to do with markets. The discipline itself becomes part of your identity, a strength that carries you through any challenge. Most traders focus on the money they want to make. The few who succeed focus on the person they need to become. When you shift that focus, when you commit to developing discipline over chasing profits, something remarkable happens. The profits start taking care of themselves. The market will test you again tomorrow. It will present you with opportunities to abandon your discipline, to chase quick gains, to let emotions override logic. But now you know the truth. Those tests aren't obstacles to your success. They're the very mechanism through which success is built. Every moment you choose discipline over impulse, you're not just saving capital, you're rewiring your brain. Every time you follow your plan despite how you feel, you're not just executing a trade, you're becoming a different kind of person. The kind of person who succeeds in markets and in life. If this changed how you see trading, subscribe for more lessons in patience and discipline. And tell me in the comments, what's the biggest mindset shift you need to make right now? Because that shift, that one change in how you think about trading, might be the only thing standing between you and the consistency you've been searching for.